Do you think Tesla stock will be able to rebound soon, or even double its current valuation? Tesla's stock is down 44% in 2022 as enthusiasm for the electric car maker fades. Still, some remain optimistic that Tesla stock will eventually double from its current valuation at around $150 per share. You definitely would not want to miss this info. As Tesla stock plunges 50% this year, analysts increasingly say yes, the EV company's stock is a buy. Despite all the challenges Tesla has faced this year, Wall Street has mainly stayed bullish. The majority of Tesla analysts tracked by Bloomberg rate Tesla stock a buy or equivalent, while the shares would need to rally a whopping 57% to hit the average analyst target price. This year's slump has left the stock trading at 31 times forward earnings, down from more than 200 times in early 2021. However, Tesla stock ended at a fresh 2-year low several days ago, bucking broader market trends. Investors remain concerned about Tesla's production, particularly in China, even though the company has denied earlier reports that suggested production cuts in the world's biggest auto market. While the EV maker launched its electric commercial truck on December 1st, the Tesla Semi's start of production failed to act as a catalyst for the stock, which has fallen 5 out of the 7 most recent sessions. It can be noted that a Tesla bear called attention to Tesla's recent price cuts on vehicles sold in the US and China, saying they pointed to a possible demand problem that could go into 2023 and cut down on the electric vehicle maker's margins. Still, despite challenges, including decelerating demand and price cuts in China, Tesla is the only electric vehicle maker covered by Morgan Stanley that generates a profit on the sale of its cars, Adam Jonas wrote in a note. The analyst, who also highlighted Tesla's potential to benefit from consumer tax credits in the United States, reiterated his $330 US price target. This is more than double Tesla's valuation today, trading at around $150 per share. Notably, Tesla stock has lost 53% so far this year, compared with losses of around 16% for the S&P 500 index. If the trend holds, 2022 would be Tesla shares' worst yearly performance on record. The stock has fallen nearly 60% from its record close of $409.97 hit on November 4, 2021, and is down 58% from its 52-week closing high of $399.93 on January 3rd. According to analysts, Tesla shares are only going to go down from here as inflation, competition, and Elon Musk take their toll. Controversial Tesla CEO Elon Musk has always been pointed out as a huge risk. Musk risk, as they call it, has been weighing on Tesla's stock for some time now. However, it recently reached another level as Musk stirred up even more controversy and sent the company's shares plunging. Tesla's stock price sank 16% over the last 5 sessions for its worst week since the pandemic struck in March 2020. By comparison, the S&P 500 index and NASDAQ 100 indexes declined less than 3%. The performance is even uglier looking further back, with the shares tanking 43% so far this quarter as prominent Wall Street analysts dial back their expectations for Elon Musk's company and the electric vehicle industry as a whole. The swarm of activity surrounding Musk and Tesla just this past week has been overwhelming. The sell-off pushed the company below a market value of $500 billion for the first time in more than 2 years. Goldman Sachs and RBC Capital Markets slashed their price targets on the stock. Then, Musk raised eyebrows when he sold almost $3.6 billion of Tesla shares, possibly to help refinance debt from his purchase of Twitter Inc. It almost did not come as a surprise when news of Musk selling nearly 22 million Tesla shares over a 3-day period ending December 14th surfaced, according to a regulatory disclosure made public. The recent sale means Musk has sold more than $39 billion in Tesla shares since the company's stock peaked in November 2021. Tesla, still the world's most valued automaker by value, has lost more than $700 billion in market capitalization since that all-time high. It wasn't clear what prompted Musk to sell additional Tesla stock, and the company didn't respond to a request for comment. However, Musk took to Twitter and posted, "At risk of stating obvious, beware of debt in turbulent macroeconomic conditions, especially when Fed keeps raising rates." Also, Musk was toppled from the peak of the Bloomberg Billionaires Index, meaning he's no longer the richest person in the world. And his controversial management of Twitter's social media rules, which have soured some of Tesla's customer base, amped up when he suspended the Twitter accounts of well-known journalists at outlets like the New York Times and Washington Post. "I think the stock is only going to go down from here," said Catherine Faddis, senior portfolio manager at Fernwood Investment Management. Elon Musk has damaged his reputation with this Twitter business and all the negative news flow. As concerns about the economy and a recession next year continue to grow, Tesla's outlook is likely to darken. Demand for its expensive electric vehicles could wane as high inflation and rising interest rates sap demand from consumers reluctant to spend on big-ticket items. The specter of a slowdown will probably have equity investors seeking safety in stable buys rather than growth stocks like Tesla. However, some remain optimistic about Tesla despite recent troubles. In fact, Morgan Stanley named Tesla stock as a top pick. The investment management and financial services company named Tesla one of its 3 top picks for the year. Despite Tesla's recent challenges with its stock valuation, many analysts still see the automaker's stock as an opportunity for value growth. Not only did Morgan Stanley maintain its price target for Tesla at $330, but also expressed optimism on Tesla, stating, "While we see 2023 as a challenging year for the EV market categorically, we believe Tesla's gap to competition can widen. Given Tesla's current valuation at around $150 per share, a $330 valuation is indeed more than double its current price." Citi analyst Itay Michaeli, who recently upgraded the stock, has one of the lowest price targets on the street at $176. The analyst said he was turning more positive because Tesla's slump means that some of the overly bullish expectations in the stock, including on unit sales, had now been priced out. While Tesla stock may have taken a beating this year, it has developed a rather surprising group of supporters. Despite Elon Musk's reservations about them in the past, Tesla shares are now seeing some support from Wall Street analysts. Tesla shares have notably seen a decline of about 37% since late September, partly over fears of a recession, rising interest rates, and the overhang from CEO Elon Musk's Twitter acquisition. The slide experienced by Tesla stock has been massive, but it also appears to be the reason why securities analysts are wagering that the sell-off has run too far. As noted by Bloomberg News, over 60% of analysts now recommend buying Tesla stock. That's the highest since early 2015. Such ratings have risen steadily this year as well. Catherine Faddis, senior portfolio manager at Fernwood Investment Management, shared her thoughts on the matter. "The Tesla bulls I know are loading up at these levels," Faddis said. This does not mean to say that Wall Street is unanimous in its support for Tesla stock, of course. Around 27% of analysts tracked by Bloomberg continue to rate Tesla shares as a hold, while 13% still hold a sell rating. Retail investors, however, have doubled down on Tesla, accumulating their stake amidst the EV maker's drop. As per data from the Vanda Research, Tesla was second only to the Spider S&P 500 ETF in the list of the most bought securities this year, at least in terms of the number of days at the top spot. This bodes well for the EV maker, especially as Tesla retail investors have gained a reputation for having a solid grasp of the company's fundamentals. CEO Elon Musk highlighted this himself in the past when he noted that retail investors have better insights than Wall Street. Additionally, Tesla continued to experience enormous growth and hit new records in 2022 regarding delivery numbers. In places like Europe, electric vehicle sales grew in Q3 despite economic challenges. That said, investors are interested in where Tesla will end the year since it is one of the most actively traded stocks. Coin Price Forecast, which uses data science and machine self-learning technology for stocks and cryptocurrencies, has predicted that the price of Tesla will climb by the end of the year. Notably, Tesla started 2022 at $352.26. The forecasted Tesla price to finish trading on December 30th is $185, a rise from today to year-end by plus 10%. While it may not be much, it is still a significant rise, which is expected to soar more by next year. Subscribe to this channel for double the fun watching Tesla stock content.